CRED tried doing rewards. I absolutely dislike them. I have so many points which are absolutely useless.
अभी मैं क्या करूँगा? मेरे को खुद ही याद नहीं रहता कि कहाँ मेरे कितने points पड़े हुए हैं. The number of abuses we have heard for people having an insane number of CRED points stashed away for no rhyme or reason is not fun. No future कि आज points मिलेगा कल ये कर लेना.
How are you different from CRED? Like, because CRED also made the same promise, right?
CRED's largest revenue source is loans right now. It's getting good credit-worthy customers and selling them affordable loans. That's what it does. 22-year-old kid who gets a first credit card because he has a new job. He also has a shot to have a 750 credit score, right? A high credit score does not mean a high spending ability.
How should I maximize my next vacation?
Don't take a 3 lakh rupee loan to travel to Europe. Don't take liabilities to fund validation.
What are some things which people consistently get wrong?
Now, if you're taking an unsecured personal loan at 25% ROI just so that you can have a Bali sunset in your feed, I think that's just terrible. Just like when you get hospitalized, that is the biggest trigger to buy health insurance, not before that.
I used to think this is all a scam. Thanks, Yash, for coming on the podcast.
Always great to be in your office and speak to you.
No, really appreciate it. Yeah. But for the audience today, the way we are structuring this podcast is how do you maximize your mutual fund investments? Right. If you're a regular mutual fund investor,
right,
how do you maximize it in such a way that your lifestyle can be funded maybe a little bit more easily than what it was before?
Correct.
And I will try to draw parallels with credit card miles.
Yeah.
And I have been a miles maximist for the last like 4 or 5 months.
Sure.
I started doing that I think 2.5 years ago, but only in the last 4 or 5 months I've understood what miles can do, what credit card points can do for you.
Sure.
And then I realized that, okay, I used to think this is all a scam. After credit coins, I lost my faith in like any kind of loyalty program. I'm like, yeah, ये ना scam ही होगा. But now that I've been redeeming things myself, now that I've been in this ecosystem long, I know that there is a way you can maximize your current spends to a very large degree. So we'll divide this episode into 3 parts. We'll first talk about what are mutual funds, why should one do it, for people who are maybe new or for people who want to do more of it. Second part, we'll dive deeper into how can we maximize this. And maybe third part, we can dive a little deeper into the program that you have started, which is really, really interesting.
Absolutely. We'll go your way.
So I think mutual funds is now a very well marketed product. Thanks to all the advertisement, all the ads that the government has also done. What I want to understand is in this very chaotic world where there's war happening, stock market is going up and down, SpaceX doing IPO, people are saying bubble is about to burst. There's so much conversation. Where do mutual funds lie as a product? How safe are they?
Yeah.
If somebody has already started investing, should they double down or continue to double down? And for somebody who's just about to start, what should be their first starting point?
Sure. No, so look, it's a great way to start the conversation, and it is definitely a fairly well marketed product. But if you just still look at the numbers for a second, right? Like if you look at it, there are some 28 crore odd folios in India today. Folios is just an account that you create with an AMC. AMC is what creates a mutual fund that you can invest in. The 28 crore folios in India, there's somewhere around 82 lakh crore of asset under management in retail Indian mutual funds, which is a lot of money. It's grown 6 times in the last 10 to 12 years. But if you look at the number of unique investors, there's just 6 crore unique investors behind those 28 crore folios and 82 lakh crore of AUM, right? Those 6 crore investors correspond to 4% of India's population. So despite all the marketing, only 4% of the Indian population is actually even having a folio. Could be just 20,000 rupees, but just even has done anything to do with mutual funds. So it's still a long way to go. Should people do more mutual funds? Absolutely, yes. Look at again stats. In the last 10 years, Indian equities have always given positive returns, right? Last 10 years. There has been COVID that has happened. There has been market crashes that have happened in the interim. There has been different global shocks that have happened, but still consistently positive returns. I'm not saying it's double-digit positive or high single-digit positive, but it's been positive returns. So people have not, on an average, lost their money when they have been passive mutual fund investors.
Okay.
And that brings me to the point about how I look at investing in mutual funds, how I look at investing in equities. That look, if you don't do something professionally, don't do it casually in your spare time, which means that don't try to become a trader when you do not have the bandwidth to track what is happening with companies, what is happening with individual sectors, etc., etc. If you have basically gotten invested in blue chip, index, hybrid mutual funds, etc., one of the things that is there about the Indian markets and other global markets on an average is that time in the market beats timing all the time, right? Which means that if I stay invested, don't try to time the market, don't try to be a trader, don't try to be like, okay, today I'll buy the dip, right? That never works. Don't try to get worried about how the markets are doing, right? And don't try to look at your brokerage account every morning. Say, oh my God, it's gone down by 0.2% yesterday. Should I react? No, don't react. It's fine. Because that's how people get into trading. 99% of traders lose money though.
Yeah.
Right? Because A, people invest on FOMO. B, people are not professional traders. They can't track company performances, annual statements, quarterly statements all the time, and then they make bad decisions. Just leave it to the professionals. Fund managers at AMCs are professionals. Their job is to look at that all the time, and they do a fairly okay job on an average.
Yeah. Tell me something. You see a lot of mutual fund portfolios. Let's say somebody makes 24 lakhs per annum, roughly. What is the amount of money that they spend in a mutual fund every single month if they're living in a city like Delhi, Bombay, Bangalore, where they might be married and they have a house rent and travel and experiences and concerts to go to? What have you seen as the average amount that people are spending, especially people who are coming to CaratClub?
Yeah. So we have experiences of looking at two different platforms now. One being Cashy, which is basically a platform of consumers who are, say, earning around 60 to 70,000 rupees a month, living in a metro, being Bangalore, Hyderabad, Chennai, Bombay, Delhi. And then you have consumers at CaratClub. While we don't ask customers for their income on CaratClub, what we see normally is the average holdings being around 10 odd lakhs for consumers, which is a fairly substantial number given the stats we just spoke about, of 4% people only investing in mutual funds, etc. So comparing across all of these cohorts, I think that bare minimum, which is a very great stat for an average salaried Indian consumer investing in mutual funds, they do at least 10% of whatever they are earning every month as a paycheck into mutual fund SIPs, right? Some money will go in, which has basically been a good habit forming behavior. Very surprisingly, you mentioned about metro cities. I see B30, which is a term typically used by the mutual fund industry, which is the towns below the top 30 cities.
V30.
B30.
B30. Yeah. What is that?
It's below the top 30 cities. They are contributing to the maximum growth in new portfolios right now, right? So there's a lot of, I think that's where a lot of marketing has now started having an impact. That's where the 4% number will now show a growth. Over there also you see the 10% number coming in. Average incomes, the 10% of that, I easily see that being put into mutual fund investments. I see the number being higher where people are able to live in their own houses, which is more common trend in some of the B30 towns.
When when you look at your portfolio, maybe your own portfolio, let's say if I have 100 rupees to invest and I'm not somebody who knows the market very well, which is I think most of us, like if you look at my office and we have, let's say, 200 people in the office, most of them don't know investing as much as one should know.
Yeah.
For them, if I look at 100 rupees ka pie as investable income, not your earning, 100 rupees to invest.
Yeah.
What have you seen as a general trend? Like where is most of their money going today?
So I think it depends a lot on age, risk appetite, and where they are in life. I'll digress slightly. Like we've seen data that in our customers up to 30 years of age, there's hardly anybody buying life insurance for that matter. And suddenly at 32, 33, there's a very radical spike because they get married and start about having a family, etc., etc. So they're like, okay, I need to have life insurance. So it depends on where you are. And the traditional mindset also influences you that, when you get married, parents would typically say that, okay, bima karwa lo, whatever it might be. Right?
Correct.
So you might do that. Now, same goes for investing as well, right? Like what happens is that when people are relatively younger, they're looking for, which is a little unfortunate, but I think it's changing also now. But they would look for, because they're now freshly salaried, they're now getting monthly paychecks, they look for quick dopamine hits of, very rapid increases in their portfolio. The ability to stay in the market, to see what happens 10 years, 20 years later. They're not thinking in those horizons. They're saying that, okay, how can I make my 1 lakh, 2 lakh at the fastest, right? Now, I think that is, look, unless you are working with, you're working in a sector where you have deeply profound insights of what is really happening there, or you're trading in commodities that I wouldn't, that you have more ideas about. On an average, that is not possible, right? So if I discount for all those folks who are investing that manner, typically in an earlier age bucket, I'd see a lot of active deployment towards small cap equity or mid cap equity in general, because in the equity market, those are the ones that generally are obviously more volatile, but generally give you a higher CAGR of returns as well. So we see a lot more deployment towards equity mutual funds, within equity mutual funds, small cap, mid cap equity in the as a high proportion, relatively high proportion. It would still not be 50%, but we say 15%, 20% at slightly earlier age groups. Then again, lower salary bands, but earlier age groups would play more safe. They would do blue chip stocks. They would do index funds, etc., etc. So they just grow with the market. They don't want to outpace the market. So that is what we see happening a lot more.
Very interesting. So KaratClub's promise is very interesting. You're basically saying if I have, let's say, 30 lakhs in mutual funds parked, it's already giving me the returns. Hopefully the market goes up, and it's giving me the returns. You're telling me that you can help me maximize on that 30 lakhs. Help me understand the model, because it's coming off as too good to be true, right? Like I have, my money is already growing, and now you're telling me, acha, usko bhi main aur maximize karunga on my spends. And my assumption, and correct me if I'm wrong, is if somebody has 30 lakhs in their mutual funds, क्योंकि इंडिया में एक insight ये है कि कभी भी आप एक जगह सारा पैसा नहीं डालते.
Absolutely.
So this person is maybe investing in some FD, gold, maybe real estate, maybe some. So this person has money, which means they're spending on vacations, they're going international, they're doing experiences. So this person is also spending a lot. So what is the model? Like, how are you helping me maximize my 30 lakhs in mutual funds that are invested?
What happens right now is that if you look in Indian financial services, you get people reward you, or people give you something back when they are vying for a pie of your behavior. Right? For example, when you spend with credit cards, you get 1 to 2% back, right? Why is it that you're getting that back? Because whatever entity has issued that credit card wants you to use that more and more often, and they'll keep layering it on top of it, right? Probably give you miles on top of it, they'll give you hotel points on top of it, so they keep layering it on top of it, right? Because they want to keep using it, right? Now, in credit cards, who's paying for that 1 to 2%? It's getting paid by the guys who do not pay the credit card bill on time, because they are paying the bank at 36% to 42% annualized, right? It's a fairly hefty rate. With the highest, it belongs, topmost slab of what a bank charges on unsecured loans, right? So basically, they are paying the guys who are revolvers on the credit card. Revolvers on credit cards, the guys who are not paying on time, they're just paying the bare minimum amount, and the rest of it they're paying at 36%. So they are paying for that entire reward points party, right? So either if you're a credit card customer, either you are the party or you fund the party, right? There is no sexiness in people for making you feel happy about having a portfolio just compound. And the insight for us was two things really. One is that, look, you are not getting rewarded for keeping your money invested in a mutual fund. That investment will only reward you at some godforsaken time 50 years later when you want to withdraw, right? Which is where they all show the calculation that because of a discipline, this 10 lakh rupees will become a crore at some point of time, right? But you're compromising on a lifestyle today for that. Compromising is a strong word, but you're letting go of certain things you could have done with that money, so that you are disciplined to put in money for a future self of yours, right? That's number one. Two, that if you look at the ultra HNIs in India, if you look at the 0.1% of Indian population, or the top 1% also of the Indian population, they leverage their assets to access better lifestyles, get access to more stuff, and live a better life, and just access more credit as well, right? So what they leverage their assets in terms of, could be hard assets, could be mutual funds, could be equities. They use all those assets so that they can get more access to wherever they want to go. They can access a better lifestyle for themselves, and they can get better credit. But the rest, 99% of the Indian population, they don't do it, right? They treat the mutual funds as a locker, right? They don't treat that as a passport to be able to do something, or the assets to do something else, right? Has India ever leveraged the assets to do something else in their lives? Absolutely yes. Your grandparents might have considered gold loans at some point of time.
Correct.
Right? That's an asset-backed loan, right? That's been going on for centuries. But this new India, this India that earns money every month, puts a certain amount of money in mutual funds every month, they treat that money as money being parked under a mattress.
Correct.
Right? They don't touch that.
Correct.
Which is completely contrary to how the large Indian family offices actually keep leveraging the assets all the time. So we realize that, can we basically bridge that gap? Can we solve for this thing in which people's discipline should be paid for? That can I change your mutual funds portfolio from being a number into an app to a passport into a better lifestyle? Right? That was the idea, right?
So what you're basically saying is every single financial product rewards you for discipline.
Yeah.
But mutual funds actually don't give you that reward on a day-to-day level.
Yes, and you've been so disciplined with them.
Correct. In fact, like since we're discussing credit card miles, I max on like so many miles, right? Like I literally get the reward every month. Like if I want, I get those points, I can redeem it the very next month.
But that makes you keep using the card all the time.
Correct. I stick to those two cards,
Yeah.
Burgundy and Infinia, which we're discussing, because they give me certain points. So I keep on using them as well. Plus, I'm redeeming them on a, if not a monthly basis, at least quarterly, I redeem them on a big vacation and I use those points. Mutual funds, you're saying nobody does that, and that is the insight and the gap.
Suppose you have a crore of money parked in a mutual fund. When was the last time whatever platform used to invest in mutual funds said that, look, Ayush, thanks for being a great customer for us. Let me get you front row tickets for a Coldplay concert in Bombay. Has it ever happened?
No.
But that should be normal. Incidentally, there's this entire industry of private wealth in India, right? When the moment you cross 6-7 crores of liquid assets, your private wealth management guys would keep chasing you for that. They would want to onboard you as their client, and they'll give you all of this on a platter. They'll give you all of this because they're saying that, look, let me arrange for the best safaris for you in Masai Mara. Let me get you front row seats for all the most exclusive concerts out there.
No, I find this platform very interesting because what you're saying is you're creating a win-win situation by saying if somebody has a solid mutual fund portfolio, there is a very high chance that they have spending capacity to go and shop from the best brands. The biggest of the brands are looking for high-value customers.
Absolutely, 100%.
Because their CAC is so high on a Google ads, Meta ads, TV advertising. You give access of great customers to these brands so that their CAC is low. It's a win-win situation.
Absolutely.
Customer को discount मिल जाता है और एक अच्छे brand को एक अच्छा customer मिल जाता है. And in that transaction, you make money.
I make money in that transaction as well. Because now I'm not making them spend all that ad money, bake that into their pricing, and then offer the product, right? I'm saying, look, you don't have to do anything right now. This guy wants that, premium T-shirt, or he wants to go on that vacation, or he wants to buy that, expensive gadget, which otherwise you would be like, all over Instagram trying to sell to this guy. So this is where the customer is looking out for that. So can you basically do that transaction over there, and I make money in that transaction. So I don't make money if you don't use my platform. Right? I'm not just here charging a platform fee कि अभी देख लो जो करना है कर लो. And second, I don't do points. We have been very conscious that points तो करना ही नहीं है because the number of abuses we have heard for people having an insane number of credit points stashed away for no rhyme or reason is not funny, right? And hence we realize that, look, boss, we will give hard discounts to people. We'll give actual deals to people. No points. No future ki aaj points milega kal ye kar lena.
And but how are you different from CRED? Like, because CRED also made the same promise, right? I will get you a credit worthy customer. I will get you access to a great brand. Because I'm giving a credit worthy customer to a brand, hence the brand should give the credit worthy customer a discount.
Absolutely. By making them spend the credit card bills on time. That's what CRED said. If you're spending the credit card bills on time, your credit score would be good, and hence you're on my platform. And I'll go out there and say that I have the biggest community of credit-worthy customers out there. Great. Now what do you do with that? You can only sell them loans, right? You can only sell them other financial products out there. Because if you're saying that they will come and buy premium brands from you, they're high spenders as well. I'm sorry, they're not. Because a 22-year-old kid who gets a first credit card because he has a new job, he gets a 20,000 rupee credit card issued by the bank that he has got a salary account in. He's probably maxing it out also, whatever. He's probably spent 10,000 rupees on that 20,000 rupee card every month. He's got a 1 lakh rupee salary. He also has a shot to have a 750 credit score, right? So a high credit score does not mean a high spending ability. It means disciplined way of paying your bills on time and paying your loan EMIs on time, right? That does not mean a high spending ability. So you have to be very clear about what you're trying to build the platform for, right? So CRED's largest revenue source is loans right now, right? It's getting good credit-worthy customers and selling them, affordable loans. That's what it does, right? Now, in our case, we are saying that, look, I am not letting you in below a benchmark level of mutual fund. So, as I said, if you are able to, in a disciplined manner, build that corpus out there, you definitely have spending ability because you had that much amount of spare income throughout your life or throughout your investing life, which is the last 5-6 years, to actually build that corpus. And chalo, even if you don't have disposable income in your bank account, I'll make you leverage those mutual funds and give you access to a lifestyle that is great. And those mutual fund corpus is also on an average 10 lakh rupees. So even at 75% LTV, loan to value, I can make you basically, purchase stuff up to 7.5 lakhs. Not that you have to do it, but that money is not coming from a bank account, which basically now makes a genuine community of people that can actually spend money intentionally on a brand's lifestyle products that they really want to.
Very interesting. So you're essentially making a new type of community of high spenders. And because all these high spenders you have in this community, all brands want it. And hence brands will pay you some commission if they make the transaction.
Absolutely.
I was speaking to the BMW showroom in Bangalore and they were telling me that every year JITO, the GenZ organization, last quarter, they buy so many cars that they have a special JITO rate. So JITO is a community of lots of business owners from the Gen community.
It's massive.
Massive community. Lots of my friends are part of it. What a wonderful community. They buy so many cars in the last quarter of that financial year that BMW gives upwards of 10 to 11 lakh rupee extra discounts sometimes on the cars. And this is like not hearsay. Not, I'm sure people will not even believe this.
But I do.
I've seen this in front of my eyes. He has shown me the rate card. Ayush, ye a normal rate. Ye raha rate JITO ka. If you're a member, I'll give you a discount. Because your community, JITO as a community is so good. They're disciplined. They've paid on time. They buy in bulk.
A lot of trust.
They always buy. So there's a lot of trust. And that's what like good communities have done. And this discount is guarded behind a closed door for very good reasons. You are basically telling me that you have made a new community of that.
That's basically basically that's where we want to get to.
Very interesting. No, this is so interesting because, and I also want to understand that when I'm getting these discounts, what are these type of discounts? Like if I have, let's say 20-30 lakhs in my mutual fund portfolios, where all can I get a discount from KaratClub? Like tell me some things where I will make my lifestyle better.
Right. So look, again, very, very, very interesting question. And our thinking has also evolved over time. We actually started building this as a loan against mutual funds platform.
Okay.
Right. And because I saw that a customer, because we've been running Cashy for 10 years now, and we used to see that which is a unsecured lending, digital lending platform. We used to see that customers would come on the platform and would want to borrow from me at 24%, 25% ROI, etc. And they want money for 3 odd months. But I would see the bank statements because we use that as part of our underwriting process. I see that this guy has got a lakh rupees in his mutual funds and he wants 30,000 rupees from me at 24%. Why is he not leveraging his mutual funds and taking a loan against those mutual funds, right? And you say, look, I want to like buy something right now immediately. So I want that. And this entire awareness about saying that, look, you can actually leverage your mutual funds and do that entire transaction also is possible. There was just not common knowledge, right? And to be fair, that entire stack of making that, mutual funds the only leverageable digital secured loan, a loan against mutual fund, the only secured loan available digitally, is only been there till for the last 3-4 years. We said that we will basically enable that, right? Because there is a big white space over there. Now we will, to your question, all those things that these guys want to spend their money on, right? Let us see if we can give them something better than what they expected, right? Which is that if you want to buy a phone, if you want to go on a vacation, if you want to buy, I'll come to buy these categories also. If you want to buy premium furniture, if you want to go to a concert, etc. Can I, whatever is it that you're taking a loan that you're paying an interest on, can I basically do something with it that is absolutely incredible and something that it will be very hard for customers to believe. And I tell about how hard it is for some people to believe that that is happening as well. So to my previous point, what we then do is that we reach out to all these brands that we see normally customers would buy a product or would spend money on. Then we go back to lenders that we would partner with, so that we can possibly execute a loan against mutual fund also if we want to, right? And then we reach out to the customers also that are trying to do a transaction of this sort. So we say now the proposition becomes as incredible as this. I'm saying that what I say is that your next phone, your next smartphone purchase, and statistically, 40% of all phones in India are sold on EMIs. 2/3 of premium phones are sold all on EMIs right now that people pay interest on in a lot of cases as well. So you're saying your next smartphone purchase, your next home renovation, your next holiday, international, domestic, your next hotel booking, all of this will be at a price point lower than what you'll get anywhere else. And if you want a financing, I'll do a zero cost EMI as well. And if you for a certain tenure, and if you think that look, you want a longer tenure loan, then I can give it to you at like 9%, 10% ROI compared to a credit card giving you at a 36%. India has now become what we call as a experience-driven consumption economy for these customers, right? 27% of all personal loans that were taken last year, people declare they're taking it for travel. That's a massive number. 27% of loans, unsecured loans, people are taking, they're taking it to travel, right? That is number one. Number two, that look at all the indicators out there. Like this Coldplay Ahmedabad concert was the single biggest concert of the 21st century. And so the Indian experience economy is real, except that it's getting funded the wrong way, right? So we said, can we change the power source of that, right? For it to not always be getting funded by high yield loans, but to get funded by something that is better, right? And can we make the power source the asset that these customers already have, right? So now, first category was experience driven, everything to do with experiences of people, which is essentially starting with vacations, right? We say that, look, you want to go somewhere, either we have a bunch of places that you can go to, or if you have any place that you booked a vacation from, tell me that itinerary, tell me how much you got it for, I will discount it further, right? So I will be the lowest price vacation that you will ever access, and then pay for it with your credit card, so earn points on that as well, right? If you don't want to take a loan, if you want to make a down payment, I will give you, just like your JITO Mercedes example, that I will give you, because you're in the community, I will give you a price point that is lower on the same itinerary, that is lower than anywhere else, and then pay with a credit card. So you basically.
But they have to pay through you.
On my platform.
Okay, on your platform.
On my platform, but pay with a credit card, right? So it's just like paying any other OTA out there, right? You're paying a make.
It's like double dipping, jisko bolte hain.
Fair, but you're getting a discount and you're getting a reward points.
Right. So you're getting a credit card reward points, plus you're getting a discount because you are a good customer who has mutual fund portfolio.
Secondly, just forget a vacation. You go to a hotel with 90% of hotels, you're taking it to 100 soon right now. The price points that you see for any hotel booking, domestically for sure, already right now, internationally will take another 10 days, will be the lowest that you'll find across all platforms out there, right? And similar to that, then we see that, okay, can we basically now enable different experiences? So look, I want to, there's a request that came from a customer that because I do a lot of these customer calls, that what is it that you want from a platform like me, right? Yes, there are a bunch of other things. Okay, I want to take night safaris all across Indian national parks, right? Arrange that for me. I'll give you dates, figure out. So I don't have to manufacture all that. There are a bunch of people who do that, right? But I have to just enable that. And, and I get that because I do that at scale, I get a price point that's better than anything else, right? Then comes harder assets like, electronics. People want to upgrade their electronics all the time. You buy a new phone, you want to buy a new refrigerator, you want to buy premium furniture. Again, lower than industry price points on whatever I offer on the platform, right? Then you get to other categories like wellness, etc., etc. So this is basically the whole stack of what we have seen people spending their money on. And given what we built with the platform, this is what we're able to offer discounts on.
I want to also break down, like, let's take like real example. Let's say I'm somebody making 30 lakhs an annum. I live in Bangalore. I have a wife, maybe 34 years old. How should I maximize my next vacation? Let's say I have a vacation coming up. I have maybe 10 lakhs in mutual funds. What discounts can I get? How do I make sure that my next vacation is cheaper, I spend less, and I experience better?
There's a lot of hacking that you can do around your credit card spends if you do it wisely, right? I think a lot of people stay away from that because they find it almost scammy. And there are a lot of like influencer content, if I were to say that, around pushing the wrong product or right product, etc. So people are not sure about what is really happening, and people get overwhelmed. That ki kya karna chahiye. So just let it be. Like jo credit card hai wo use kar leta hai. So if you plan it well, if you plan your spends well on a platform, or on having, first of all, having a card that has got a decentish to good rewards program. I'm not vouching for a card right now over here, but I'm just saying that there are a couple of them that can do that for you. Now, once you basically get to on that, and then saying that, okay, I will route all my major spends on the platform, because most of any good card will try to also accelerate your reward points if you spend more. We spoke about Magnus Burgundy. Does a lot. It does that fairly well.
Correct.
Which accelerates your points above a certain level of spends. 1.5 lakhs. Yeah. So if you do it, then you keep racking up points. Route all your major expenses by that.
Yeah.
Two, as I said, the other people are aloof from credit cards, which is why they stay away. Is that don't use credit cards for credit. Use credit cards for a lifestyle. Don't do credit cards because you don't know how you'll pay that bill. Abhi pay kar dete, baad mein dekhenge. Don't use credit card for that, right? If you can't pay the bill 15 days later, you'll not be able to pay now also. If you can't pay it now, you can't pay it 15 days later also. Correct. So just to know that, but use it for lifestyle. Route all your spends by that. So first, you have a good racking up of points over there, which allows you to possibly, at least, if not fully discount for it, cushion the impact of the money that you're going to spend on flights and hotels, right? So that's number one. Two, that generally it is advisable that you go through somebody who can plan the trip for you. Like some people like doing the research themselves, but then you don't have access to what's called as a bulk pricing, or what is called, or somebody who can basically discount or hunt down the best prices for you for the same itinerary, same experiences you want to have, right? Now, what I mean by that is that I want to, for example, go to Japan for 2 weeks. Now, I am booking the hotels and flights, or trains from one city to another city myself, which is fine. You want to like sort of do the research yourself, you can do it. But possibly if you get somebody to do that for you, it becomes very hassle-free. You get a lot more options, and two, that they might be able to give you a price point that is including the fee, which is better than what you might be able to do if you book everything individually yourself, right?
Okay.
Now, there is a reason why, in spite of AI coming out, in spite of you having access to itineraries at fingertips, if you put it on Claude ChatGPT, number of offline travel agents have grown the fastest in the last year, right? There's no reason for that, because there's value that they're adding in, right? I'm not saying that the best way to add value in the travel
People don't have time.
People don't have time, right? And they don't want to do that research and then figure out, is this the best price, and compare everything across 5 platforms.
And they also don't want to get it wrong. Like if I'm taking my family once a year to Japan,
100%.
I don't want to get it wrong.
So it's a value that you're extracting out of the trip, that you're going with people you want to go to the best places. B, value that you're extracting in terms of price.
Yeah.
You want to make sure you don't want to compare the same hotel in one city you're visiting over 10 days time over 6 platforms, right? And then keep shuffling back and forth. Arey, ye to is din zyada sasta tha, dusre zyada mehenga, to main puri itinerary change kar deta hu abhi, so I can go there, right? So let somebody do that for you. And number 3, value in just terms of your time put in. You go on a 10-day vacation, you're spending 20 days to research on where to go. Right. So I think that if you're doing that, the maximizing the vacation will be good. Use good credit cards. Get somebody to plan the trip for you.
And does KaratClub plan the trip for me?
Yes, I was just coming to that as well. You just tell us where you want to go, and we'll plan all of that for you as well. As I said, if you go somewhere else, if you go to a Clear Trip, Make My Trip, Agoda, wherever you want to plan, you go there. We will make sure that the price you're getting on us is the lowest price that you get for the same itinerary. Right. So there's a lot of value that gets driven over there. And number 4, that look, don't take an unsecured personal loan for that. Don't take a 3 lakh rupee loan to travel to Europe, because the 3 lakh rupee is actually compound. If you look at it on a 20-year time horizon, probably you're spending 10 lakh rupees on that vacation. That's what it could have become. If you have 3 lakh rupees in mutual funds, leverage that. And if you have the lifestyle to support it, and you don't have access to EMI financing options, it'll probably be 9% that you can easily pay over a period of 2 years.
Very interesting. So you're telling me, if I'm going on a vacation, if I use this framework, then I can maximize the spend, which is number 1, I use credit card wherever I can because I earn points.
Yeah.
And I only buy things which I can afford and not things which are out of my reach. Second is I come to a platform, let's say like CaratClub, and I tell you the destination.
What you want to do,
and you help me with...
Make me work for you.
You help us make the right itinerary, and then make sure we get the cheapest rate of that itinerary.
Right.
Then for the payment of that itinerary, once I've already gotten a discount from CaratClub, I then further make the payment on credit card. I get more discounts on that. And in this entire process, save time, I get discounts, I get 100%. Points.
And don't take liabilities for funding a vacation.
So you're saying don't take unsecured loans for vacations. If you already have, let's say, a few lakhs in your mutual fund, it's always better to utilize that as an asset and take discounts on top of that.
And I'm saying that as somebody who's been running an unsecured lending company for the longest time. Again, this is going against my customer base when I say that look, don't take liabilities to fund validation.
I think that's a good sort of point of discussion. What is a good loan and what is a bad loan? Like how, if I'm a 24-year-old, how do I know if I'm taking a good loan versus I'm taking a bad loan?
I would first start with what are bad examples of the kind of credit that we have seen people taking, right? Like, look, what happens is that we are living in an economy where you're spending 5 hours, or we're living in a time where people spend 5 hours every day on an average at their phones, right? Easy guess, 70% of that would be probably scrolling through Instagram, looking at other people's stories, right? And just because you want to signal validation, different age groups in India, different net worth buckets in India have different value signalings, right? People want to show that they belong to the tier right above where they actually are, if there are tiers out there, right? Somebody wants to show that they've got the brand new Samsung phone out there. Somebody wants to show that they've got a brand new iPhone out there. Somebody wants to show that, look, they just traveled to so-and-so place in a business class flight. Somebody wants to show that they were in Japan for 10 days, going all over the place. It's value signaling, right? People do more for validation signaling than they actually do to enjoy themselves, which is pretty funny, right? Now, if you're taking an unsecured personal loan at 25% ROI, just so that you can have a Bali sunset in your feed, I think that's just that's just terrible, right? Because you're taking on liabilities to fund what people think about you. Right, which is not the best, right?
So saying these discounts were always accessible to somebody who was making 5 crores plus. You've just brought that same level of ecosystem to somebody who might have 10, 20 lakhs in savings.
In mutual funds, yes.
In mutual funds, and that's the overall unlock that we're looking at. Very interesting. Whenever I used to think of rewards, I've always only thought of credit cards. What is the overall change that you want to drive? Like, is it something which will sit, like will CaratClub sit alongside credit cards? Is it something which you want to be very, very big on its own? How do you see it sitting in the entire ecosystem of rewards? Because CRED tried doing rewards. I absolutely dislike them. I have so many points which are absolutely useless. I mean, I'm sure the CRED team also knows this. There's no shying away from it. How do you want to make sure people use these rewards and discounts from CaratClub in the long term?
So first of all, we've stayed away, as I mentioned earlier. We will never have reward points on the program. We'll never have it. You'll never see us giving you points for doing something, right? Even if we pilot it for the interim, which we have, we will definitely stop it, right? We will never have reward points because we believe that customers who basically are disciplined investors, they've got spending power. They deserve us giving them actual discounts, actual experiences at a better price point, rather than telling them ki reward le lo, baki khahi kharch kar dena, right? We don't do that. And two, there's a lot of cognitive overload also in reward points. Everything out there is giving a reward point, right? Your petrol pumps give you a reward point. Abhi main kya karunga? Mere ko khud hi yaad nahi rehta ki kahan mere kitne points pade hue hain, right? So I don't think it's just a deluge of reward points out there, and we don't want to be just another person doing that. Now, secondly, look. What really happens when you compare to a credit card is that we sit alongside it, right? Two things happen. One is that, look, the way I see that, I have a little dystopian view on credit card rewards, that it is always bound to get devalued at some point of time. All your air miles will probably at some point of time mean a lesser than what it means now, or might mean more as well, depending on where that airline stands in their own journey. Your credit card points would mean lesser or more at some point of time. So there's predictability to that, right? Yes, you should cash out as much as you can till until the sun is shining, and do a lot more. But we've seen all these cycles of devaluations happening all the time, right? Because the points are a liability that are supposed to make you feel good, but they don't the power is not with you. The power is the entity issuing those reward points, right? They always tell you that the point value is subject to change whenever they want, right? So yes, it will sit along with those credit cards. You can spend on our platform using those credit cards. So as you said, you can double dip and you can take the max out on your credit card reward points as well. But whatever the credit card gives you other than reward points, that you say you go to a platform and say if you spend by so-and-so credit card, you have a X thousand rupees cash back for the next 5 days. You will have my discount. You will have discounts on our platform throughout the year at all points of time without giving a reward point.
And what are some common traps that people fall into when investing in mutual funds? Because I'm sure somebody will see this, they'll be like, okay, wow, these are amazing rewards, amazing discounts. This is exactly on the places where I spend. So I should maybe start. Maybe this might end up leading to people becoming more disciplined in their mutual fund investing. What are some common traps they should avoid? How should they structure their mutual fund portfolio?
Sure. So look, straight off the bat, I'll answer the second question first, which is what traps they should avoid. I think the single North Star thing is essentially consistency and discipline. Okay. We spoke about right in the beginning, that ultimately what really matters is time in the market more than timing in the market, that you stay consistent, stay disciplined. SIP means it's systematic, which means it should go out regularly at the same time every month, regardless of how the market is doing. Right? I'll come to the fund performance later on, but if there's belief in the funds, and I'll come to belief in the funds later on, but if there's belief in the funds out there, just stay consistent. Don't try to read between the lines as to, okay, ये sector में ऐसा हो रहा है तो मुझे अभी ये खरीद लेना चाहिए because war हुआ है तो this will go up, so let me buy this, right? Can you, if the answer to the question that can you do that trading activity professionally, or can you dedicate 1-2 hours of time every day to just analyze markets? If you can't, then don't try to casually do it. But consistently, discipline is very, very important. Number two, that look, while you can also do your own analytics and read about it and decide where to put money in if you're good with it, but you should always consult somebody who's a neutral. Wealth minds is a strong word, but a neutral person who can advise you, who's been doing this for some time. Typically this could be a neutral bank RM also, who's not just trying to sell you bank policy, but telling you that look, you're a customer of my bank, I can help you invest better.
I feel mindset plays a very big role in how you spend as well. What is the difference between this HNI mindset versus a middle class mindset? HNIs utilize all the credit options, their credit cards, reward points, whereas I see a middle class person is always scared. How can this person be more empowered with, let's say, a platform like KaratClub?
I think that the problem, the major difference is that, and I think we spoke about it briefly earlier, that the major difference between HNI spending versus non-HNI spending is that the HNIs really know how to leverage their assets. It could be a company they own, it could be land that they own, it could be houses that they own, it could be other assets that they own. They leverage that to unlock better lifestyles, more credit, as well as just build bigger companies as well, right? Look at all the large companies out there. The promoters of those companies pledge their shares in their own company routinely to take more credit and expand the business further, right? Yeah. On the other side, if you look at a typical middle class mindset, that could be considered to be extremely risky. कि अपने ही company को गिरवी रख दिया is what people would say, right? That would be considered as a sign of stress for a lot of people, right? But that is not stress. That is you unlocking leverage. Rakesh Jhunjhunwala said that he built his entire life on leverage, right? I mean, like obviously he would take leverage and then would compound that through incremental investments and all that. So obviously he does that professionally. He did that professionally very well. So he knew how to do that more of it. But I'm saying that the HNIs in India, the top 1% in India, know how to leverage the assets well to create more wealth, right? So they, as I say, they put their money to work twice. They put their money into investments which grow their money, and they basically use the assets that the money creates to leverage it further up to do a better lifestyle on top of it.
I think people don't realize that mutual fund is an asset that they can leverage.
Yes.
I think the entire education gap here is people just never knew that
people are not financially educated, and financial education is not a part of school curriculum, right? And hence what happens is that people play, I would say, yes, you should play it safe, but people, the middle class in India, treat assets as something to be, as I said, kept under the carpet or in the locker.
उसको छेड़ो ही मत. उसको leverage ही मत कर. Where to spend your money, how? What I want to also understand is what are some things which people consistently get wrong?
Yeah.
Like are there top 3 or top 5 places where people go wrong in their investing and spending habits?
So spending is very easy. Look, I think that people overspend, as I said, on validation signaling. As I said, they want that Bali sunset to be there in the Instagram story ASAP, regardless of whether they can afford it or not. Right? They go overboard on the Cashy platform, where we have customers earning on an average 60 to 70,000 rupees a month. Although we don't give them credit, but I've had customers who are at 120% leverage, which means that the outstanding EMIs are 120% of the salaries. Right now, they're in a bad debt trap, and most of these loans, right, most of these loans have been taken for consumption reasons, which is travel or buying a phone, etc., which could have waited out as well. Obviously, they could have planned better on as well, right? So I think highly consumption-driven credit for where people could have planned better is where people are going wrong. Validation signaling is where people are going really wrong in. And number three, that I do not think that people, despite all the education around it, I think that the entire aspect of really planning around savings and investments and then deciding how much to spend is very limited. You'll see that very few people still, even though you might feel looking at their job profiles or what they earn, you might feel that they would have, my God, this guy would have a very organized way of managing a personal finances. I think it's very haywire for a lot of people, and that again boils down to the lack of personal finance education, because people are learning that as they go. So realize कि अरे ये life event हो गया, ये नहीं होता अगर मैंने ये कर लिया होता पहले, and then they start doing something, right? Like just like when you get hospitalized, that is the biggest trigger to buy health insurance, not before that. For a lot of people, कि आगे नहीं होना चाहिए ये. Same goes for cash crunches as well. That I don't have any asset that is compounding in the background for me. So that happens a lot. Lack of organized personal finance. In investing, I feel that the one largest thing that people go wrong, we spoke about that earlier as well, is being very erratic. No consistency, discipline. 77% of Indian SIPs actually get closed within 2 years. Right? People stop doing that on a monthly basis. Now you want to buy a car, you stop your SIP, you basically break your mutual funds also, and then buy the car. So now what happens is that you have broken the habit. You're not putting in money anymore, because now you're saying that you want to pay the EMI that you have taken for the car for the balance amount. Plus your wealth is not compounding for you as well. So this happens a lot for people.
But awesome, thanks for coming. This was really helpful.
Thanks for having me. Good to be at your new office and doing this again after a couple of years. So thank you so much. It was very insightful.
Very helpful, and I hope the audience learned something from this on how do they maximize on their mutual funds portfolio. And do check out CaratClub. It's a really interesting
Please do
app.
that.
And I don't say this because I'm paid. I'm not Yash is
Ayush has been a very dear friend. He was one of the first few people I called when we launched CaratClub. That boss, I want to brainstorm on this with you. So he's somebody who will thrash me out as well if you feel.
And I've genuinely seen the product, and I feel like it's something just so good. But plus Yash's experience, like your experience in lending is so vast, and you guys have already been doing this for a decade, that you know this market well. And I always keep telling people that outsource your weaknesses. Don't try to be great at everything in life. Life is short. Focus on things which you're good at. And if you're not good at investing or trading, just leave that part to somebody else.
Absolutely.
They will, of course, making sure that person is the right person. They will take care of it far better than you will. But awesome. Thanks so much, Yash.
Thank you so much.
Thank you so much.
Thanks. Loved it. Thank you.